But we're going to be having a new stock to trade in, and that's of Burger King India. It's going to be opening on the 2nd of December, the IPO that is. They're looking to garner 800 crore rupees, and the price band is 59 to 60 rupees per share. Rajeev Varman, the CEO of Burger King India, joins us now on the show. Rajeev, many thanks for joining in. To start with, if you could just introduce this IPO bit for us, and then we can talk about business. What's the amount that's being raised via OFS? How much via fresh issue? And what's the amount going to be utilized for the amount that you're raising via fresh issue?
We basically have a primary which is about 450 crores. And there's a secondary of 60 million shares. The band is about 59 to 60. So at 60, we should be collecting 360 crores. Along with the 450 crores, that's 810 crores total size of the IPO. Now, if you look at the 450 crores, basically the amount is going towards writing off a term loan that we have about 165 crores. The balance is going to be used for building new restaurants and some IPO expenses and general company corporate purposes use. So that's basically the way we are going to use the 450 crores.
All right, Rajiv, let's talk about, the company's performance, especially in India. You've relatively been a bit of a newer player. Your peers have come into India a couple of years before you. How has the performance been? Do you expect this growth momentum to continue?
We have a fantastic, proposition over here in India. Obviously, you know that the Burger King brand, which is a global brand, it's actually the second largest burger chain in the world with over 100 countries and, over 18,000 restaurants. So we have the exclusive master franchise agreement for that brand in India. So that's a massive plus. Also, we have built the entire menu here in India. The master franchise agreement goes up till 2039. That's a very long term that we have this agreement in place. And our objective is to really build 700 restaurants by December of 2026. Now, pre-COVID, if you look at our, obviously everything went down in the COVID, and, we're kind of in a recovery mode right now. But if you look at, this parallel of 6 months prior year, if you look at 2019 from the same period, April till September, we had sales for those 6 months of over 419 crores, and that sale was coupled with restaurant level EBITDA in the double digits, almost 46 crores. So it's a very, very healthy business, and so obviously with COVID, we had a lot of restaurant closures. The good news is, we have opened 249 out of the 268 we own, and they're slowly coming back. So we are excited about that. And we have spent a lot of time during this COVID time to actually prepare the restaurants to reopen, be it, masks and, face shields and counter shields, disinfectants, temperature monitoring. A lot of work went into bringing safety to the consumers as well as our employees. And we did this not only just with our in-dining business. We also did this with our delivery business. For example, we have tamper-free bags now that are being shipped to all our consumers when they order. And these are sealed bags which you can take apart and without tearing them. We also actually attach a sanitation bag with that. So a lot of small things we have done to make sure that our food is safe to our consumers as well as for the delivery customer.
Okay. What's the recovery that Burger King saw meantime in the second quarter, which was largely, of course, the quarter when we were slowly coming out of, the lockdowns imposed because of COVID?
Yeah, actually, you know what? Obviously, we have opened 249 restaurants. We got a handful of restaurants that we need to open. The sales, delivery is coming back, and so is sales business coming back in our restaurants. The malls just recently opened. The movie theaters just recently opened. There's no new movies, but those are going to come in as well, and those will, But let me share with you a Technopack report which kind of highlights the industry general movement moving forward, what they see as how it's going to play out. So the expectation is that in F22, Q1, Q2, basically the chain restaurants and the food business in these chain restaurants is going to be back about 98-90% of pre-COVID days. And if you look at the Q3 and Q4 of F22, the expectation is business is going to go 10% higher than pre-COVID days. So that's what the Technopacks are kind of advocating. And obviously we have to go through it and see if that firms up.
Okay, all right. With everything going digital, by the way, what was the contribution from takeaways, deliveries? I'm sure you must have probably seen an increase in deliveries as well in the last few months.
That's a fantastic question. Actually, pre-COVID, the delivery business through aggregators grew over 2.5, 3 years at the max. That was the growth, and it was roughly about general industry standard was about 25 to 30% of the sales was shifting over to delivery. I don't see that changing a lot, post-COVID to after we reach the new normal. However, the company has taken a lot of steps in terms of how to move forward as a business. And for example, we just launched our app. It's a one of its kind app in this country. It is the first burger chain app that has actually a loyalty program on it. It also has rider journey, CRM, analytics, gaming. It's really an app that we will be pushing this app into phones very soon with performance marketing. But right now, the app is built, and we are just kind of going through a phase of fine tuning the app. And like I said, very proud of this app. And also, the app is, you can use this in our restaurant. If you just take this app into our restaurant, you don't actually have to go to the front counter. You can actually sit down in the lobby and on one of your tables, and you can actually place your order from there. And you will be intimated on your phone when your order is ready, and you can pick it up. So we have kind of social distancing to another level altogether. So we're very proud of this app, and you will see this rolling into your phones over the next 6 months.
What's the cost optimization strategy the company has taken so far, and how will you sort of continue with that over the coming months?
Right. So, most companies, and we are not any different. We have taken some very big steps, first with negotiating on our leases. We have been very, content with, some of the outcomes of these negotiations. And I think the landlord community has really played well and come to this, pandemic with some very good offers. So we are happy about that. So that was an exercise that actually continues. We haven't stopped that exercise. We continue to work with them, and that's a lot of help that's coming in. But that is also, this pandemic has given us an opportunity to relook at the way we approach leases and rents. For example, we were more comfortable now moving towards revenue share versus minimum guarantee rents. We are also advocating that we will now move towards longer tenures, past 20 years kind of leases. So a lot of steps that we have taken, which on the lease side, but also we already operate very light-footed in our corporate overhead expenses. For example, we were budgeting about 64 crores for this fiscal year, which we brought down dramatically down to about 52 crores or so this year. So all those adjustments in terms of how we are outsourcing things, whether something can be bought in-house versus outsourced, or vice versa as well. So a lot of small steps that we took in terms of how we're doing. The other thing is inventory management. We're extremely lucky that we had set up this entire system from day one, where our restaurants are completely connected through our DCs, through our suppliers. So we indent orders in our restaurants and they flow through all the way. So we have inventory, information on our suppliers, our distribution centers, as well as our restaurants, all in real time. So we're pretty happy about that. And I think that gave us the ability to manage our inventories very well during this COVID. And we have learned some things which we will be enhancing as well to make.
Okay. Well, Rajiv, on that note, thanks so much for joining us today on ET Now and, giving us a sense of how your IPO, is looking like, or rather, some very useful information as well for those individuals who, are going to be watching out for your IPO. Okay, we'll do one thing. We'll take a very short break on the show. Don't go anywhere.